Hello guys, glad to have you on board again. Today we'll start right away talking about the cryptocurrencies because after that big day on yesterday, cryptos are moving as well. So it's like after those months of fucking shittiness in every market asset classes, we're now triggering interesting things everywhere with a precise timing. So and I'm pretty happy to see this right now because lots of people were saying back then that the day the stock market will eventually start to show some signs of collapsing. Obviously, that will bring some money in the cryptocurrency sector. You can now see that this is pure bullshit, like I said it was. As we might have a pretty down day yesterday on the equities. Really a shock for most traders and trend traders who just figured out that the end is here and that they didn't expect it. Obviously, that's their job. We're going to return on this, but I made a video yesterday on that precise topic, so I'm not going to be talking a lot about this today. That's the point. So in the cryptocurrency sector, what's happening right now? Is it the end of the world? Is it a big problem? To me, the answer is necessarily not yes or no. It's just we're probably trapping things in here, multiple solutions to this. So don't overthink things. First of all, we haven't broken a single support. We haven't broken a single support. We haven't broken a single resistance either. So we're still desert crossing phase. There can be some volatile candles in between. But from what you can see, I mean, just zoom this in. Do you really think this is a big deal? Really, it isn't. We still haven't figured out to break the support. We're still not yet at the support. We're clearly inside the range. As you can see, we've been building quite a lot of volume. So in terms of Bitcoins, anyway, as long as we don't go 5,800, there's no bearish signs. And even if we go there, it can just be a fucking trap. So for now, I still speculate on the volatility to be maintained, reduced. And as you can see, sine was just trying to switch. So we're now switching to weak bearish instead of just bearish. So it is not detected to be a bearish activity. It's just detected to be weak bearish. Generally, weak bearish, we break them up. So we'll see how it goes. In terms of signaling, anyway, we're right into in the middle of a consolidation trade. So I don't see today's move, or let's say tonight's move, as the big of a deal. Probably is caused by a catalyst. I really don't know what this is, but if you just have a look at the intraday charts, it really is a sudden move that has been triggered approximately 3 a.m. Some kind of something has been happening, and then algos have been breaking through supports. But it's a sudden move, it's been happening quick, so not necessarily something that you want to overthink. When you're in a range, can be just, another range breakout. But it will have to adjust, so there are consequences in the Ethereum. So nothing nothing that you want to change regarding the buy and hold scenario. So you've been buying and holding, fuck it. Buy and hold means you're ready to go to zero. So what's been happening today really is peanuts. So you really don't care about that. But for those who've been taking, like I did, some speculative entries as well on top of the buy and holds, and I've been doing this on Ethereums, we might have to readjust the risk, okay? So in terms of speculative scenario, I was 3 on 5. I think right now we just need to slow down that pace and go back to 2 on 5, which means if you're too leveraged, you're going to have to take partial losses. If you're not, you're just waiting, just like I am. I have an approximate buying entry price near here, probably $210 approximate equivalent in euro. And from what I can see, basically this just looked like a range. I mean, just look at this. For the same price, we've been not moving, price consolidation, flat thing. And try to break up, failed. So as you can see, tried, installed a bullish continuation trade, and the market reversed and took it to the wrong foot. So we could very well have just the opposite right now. Bearish breakdown, followed through, and wrong foot pattern could just be happening right after. So I'm not going to pile up new entries, obviously not. It will be increasing the risk to take new bullish entries. I'll just stick to those I have and wait to have a bullish confirmation by the bullish breakout. So really it looks like a range trading to me. And no more than that. And generally, sine wave is great at detecting range activity. So probably you can expect that area to be the break area, which means middle part of the range generally. So you can forecast that range to be ranging around that price, and you want to put the stop loss below the range and not above. So if I'm right, and if the context remains a bullish trend, Means that the bull waves will go further away than the bearish waves, and that generally the bearish waves can cause pullbacks, but necessarily not breaking the initial lows and previous lows. We're going to build higher lows and higher highs, if I'm right. It's just the initial part of a trend generally looks like ranges. So this is what we could have. So if I'm right, we shouldn't go lower than that. But that doesn't mean we doesn't have room to retrace in between, what we're probably doing right now. So what I want is for the market not to go to the bottom of that range, but it can retrace. And that's no big deal, okay? So we'll see how it goes further from now, if it keeps on going down, or if it keeps on going down to be wrong-footed like it has been back then. We'll see about that. But from what I can see, you can just basically take highest close of that range, okay? Breakout level, and generally is halfway, okay? Means that the breakout level is generally halfway of that range. So you can forecast the range to be near those prices, okay? So normally we shouldn't go below $180 on that asset. If we do install multiple closers below that price, you should start to be concerned. But anyway, stop loss has to be there if it goes triggers. If it goes triggered, then you just surrender it. That's how you do when you speculate. You take risk. If the risk shows up, you take a stop loss. That's how it goes. You don't overthink things. You just manage the risk. If the market flush you out, it's because you've been taking too much risk or just got wrong, and being wrong happens, and taking too much risk is a problem as well. But for some time, you're not perfect, and neither am I. If I took too much risk, I'll simply take a loss, okay? So all you need to make sure is that if the stop loss in here is costing you more than 3%, then you're out of speculative limits, which means you have to lower the leverage to put the stop loss in here. So if you need to take a speculative tiny loss, which means reducing 1/3 of the position sizing or something like that, just do it. I mean, it's better to take partial losses to push the stop loss further away and remain chances and odds to get a decent gain in the end. All we care about is to lead to the gain. Losses are part of the process. It's not bad. If you feel losses, you're going to have problems being a trader. All right? So moving on. This is probably what the range will look like. All right? So you can expect price to go as low as that price area. You don't want to be fearing this. All you just want to do is be patient and wait for the price to eventually reach out that area and flush out. And what we want instead is for the price to retrace back to the breakout level to sign up the end of that thing. In terms of structure, okay, I'm going to be clear on this. This is what it looks like to me. Clearly, impulse in here, consolidation, another impulse, consolidation. Problem, not another impulse that we should have had it. Okay, consolidation. Okay, not breaking new highs and breaking lows. So we're currently building that kind of range. Okay, so this is what the structure looks like. Now zoom it out and think about what it is. Okay, does it really look like a bearish activity to me? Absolutely not. To me, it clearly looks like this, which is nothing close to bearish. Let me just move away. All right, I'll show you what the structure looks like to me. So to me, clearly it is 1, 2, A, B, C, A, B, triangle, C on the way. Okay, generally the C waves goes to that point and try to break it as a little bit. So I expect that price to go slightly lower. And generally it goes back to nice first impulse, retracing in here, breaking next one, making 2 waves pullbacks, back to region of wave 1, back to this one, okay, and then we generally make the nice 2 ones. So, if I'm right, and if that's the structure the market will follow, sorry, tiny mistake in here, generally we have to enter into wave 1 territory. This is what we call leading diagonals, okay? So generally we retrace back to wave 1 resistances, probably going to go there, okay? So as you can see, probably lots of pullbacks to come, but still a market that makes higher highs and higher lows. So in order to build a trend, we have multiple options, okay? And probably that's in the end of that thing that we could have some bullishness. So we'll see how it goes. Multiple options to get to the targets. It's just you want to let sufficient room for the market to prove you right and not prove you wrong and not take your stop loss in between. I think the stop loss, the way it was placed before, is too risky. I think the market can just take it, so I decided to put it down. Because I have sufficient low leverage to afford doing it. But right now I'm maximum speculative leverage. If we go there, I'm losing 3% capital on Ethereum. That's something I'd like to avoid, obviously. So I'm not taking any reinforcement right now. I'm just waiting to see if the market is going to take that stop loss or not. Okay, it's a wait and see kind of approach. We'll see about that. I am no magician. I don't know what the market is doing right now, for what reason. All I know is that I want it to break that high to confirm that it's bullish. If it isn't showing that strength, then it means I might be wrong, and if I'm wrong, the stop loss might be taken down. So fucking gold. We're gonna talk about this one. Ready to break up. We're ready to do this finally. I mean, fuck it, it's been so long. So the bears are trying to break, but now the bulls are taking it over. Inside that range, the game is now probably over. I'm ready to trigger the breakout trade. So the gold might be finally fucking showing some strength. And it's been long to see this coming, very long. So the trend trading and reinforcements to go leverage might be down the road as the squeezing pattern seems to go to the upside as expected, but still needs some validation so far, so patiently waiting. Okay, squeezing pattern needs a clear breakup, so I'm not going to take the buy entry just as we go there. The buy entry will come if we get a breakup, which means I'll take the tiny reinforcement, probably double the position sizing, when we'll make a daily candle close above those levels, which we haven't so far. So patience is still required, but finally the fucking gold is surging, and that was to be expected. Euro dollar is a buying scenario that does well, GBP as well. Euro yen has been switched to GBP to USD yen yesterday, so I don't really care about what it's doing right now. I still expect some bearishness on the euro yen, but for some reasons I have a lot more confidence right now being bearish on USD yen to play the yen part. I'm still bearish as well on NZD yen. It's trying to retrace, but anyway, big problems are ahead, and a massive breakdown should be forthcoming as the price should accelerate. You can clearly see the trend is moving on, is accelerating, and whenever we go down, the massive breakdown is going to lead us to break that low. So in terms of NZD yen, whenever it will be ready to trigger, we're probably going to make a 6 to 7% drop, which is enormous. And we can even make more than that. Probably you can expect a 7 to 10% drop on NZD versus yen, because we're going to have a very weak NZD versus a strong yen. So whenever that comes, and if that comes, huge gains to be expected. So not necessarily big amount of leverage in that scenario. Alright, sorry, that is lunch break, so I'm going to just pause that recording and start it over again after taking some lunch time. So we'll catch up with you slightly later to keep on going in that NZD scenario. Alright, now back from lunch, we'll restore in talking about the NZD GPY. So problem in here is that the market has been consolidating for quite some time. Right now we're in a daily chart time frame, so we're basically working the same support area since mid-August, and I think we're mature enough to break it down, but there is still a matter of timing. Do you still want to take the entry just right now? Obviously, yesterday is a bearish candle, clearly closing at the low and making the lowest possible close we have out there, but still can't manage to make a close below the previous lows. It just closed slightly higher than that. You can clearly see that in the 2-hour chart time frame. I mean, this is where we need to manage to make the close below those prices. So it could just very well just look like a wave 4 in here, and wave 5 just build it out there, which means we could have terminated the first bearish impulse. Might need to retrace a bit before really getting into some more bearishness. So I don't want to be rushing this scenario. I think the selling breakout needs to be done with cautions. So if today we're just retracing and making an upper shadow candle, then obviously I'll take the trades at the end of that day, but there is still some probabilities that the oversold momentum could just find what it needs to make the breakdown. Obviously at some point right here we need the volume to show up. So it's either we're going to wait, retrace a bit and find the strength to finally get through that level, or we're just going to slightly slip through it and trigger some breakout trades by stop entries. So For now, I can clearly see that the market is showing interest for that level. The volume is rising. We're above 20-day average. But our problem is that we're not surging either. And that could be problematic because we clearly have a double bearish signal in here. So in terms of strength, remains a bearish asset looking for supports and probably won't find those in here. So those speculative entries I made back then clearly are break-even right now because I think those prices cannot be retraced too. Clearly set the resistance, reached out to support, so clearly we have a double bearish in here that's going to last for quite some time. So we have it, we still don't have support, and we're waiting for the breakdown to occur. So obviously no profit taking, but just letting it go, but be aware that it can just take an additional few weeks to really rationally trigger, because we'll have NZD catalyst next week. So either the market will anticipate this and break through, or wait for those catalysts to eventually break through or trigger some retracement. If for some reason we were to retrace back to that resistance, I think it will be in validation of that scenario. Very few probabilities to see that happen, so I still remain bearish on this one, waiting for the breakdown. But so far it hasn't been happening, so you don't want to be anticipating a breakout before it really occurred. Will be the worst case scenario to get fully leveraged on that market if it decides to go backward, because I do have a positive return in here, which means the average price I have is above that resistance. If I were to go breakout trading right now, this average price will obviously slip below that resistance, which means I'll be losing some money if the market decided to go otherwise and break that resistance afterwards. So facing that potential risk that is still narrow but possible, I don't want to reinforce right now, as it will be increasing the risk, as I still don't have enough information to reduce that according risk. So NZD yen is still on a watch list, very closely watching to step into validation and fully leveraged scenario, but for now it remains patience required and kind of a wait and see approach. So EURJPY, as I said, is retracing today, trying to gather some gas in here. We'll see how high this can go, but I don't see that much of a strength possible in here. Probably going to just retrace out of yesterday's nasty bearish candle, closing at the low, closing under the Legion band. So I expect today is just kind of a latest catch-up, trying to load with sellers before accelerating on that market. So I'm still waiting for validation as well. Yesterday was bearish. Today we broke the low, so very less likely to break the highs. So I think today probably EURJPY should find some bearishness. We'll see about this. Either it could be euro or the yen strengthening faster than the euro. It's just a matter of finding out who the hell is going to be the strongest. And I think the yen is going to be stronger than the euro at a short-term perspective because of the risk rising. Doesn't mean that the long run means the euro will be won't be stronger as well. I think both will be stronger. It's just finding out who's going to be faster than the other. I remind you, EURJPY clearly is a range, and that's what the market said us by taking the wrong foot scenario in here. It still remains slightly more bearish to me, which means in terms of demand, we could have more demand for the yen than we should have for the euro in a quite short-term perspective, let's say the next 2 quarters. But this will still remain a range, so we'll have pullbacks. It's not going to be trending. It's just that we will slowly go into more interesting values in terms of euro yen crossing in that cross, but probably going to have some more bearishness to come for euro. So it's still too early to get fully leveraged on euro dollar as well, but it is because euro yen is also pricing yen, and I think yen is going to be real strong. What we had yesterday, I think, is not about to stop. It's just we're bringing some volatility back in the market that's been dying for weeks for no reasons. This, once again, was really stupid kind of trading. We're obviously erasing this in just a few days, and I think this is keep on going. It clearly is going to be wave 1, so I think the end of that wave can have some pullbacks, but I think is targeting retracing there and probably make a tiny little bullish breakup. So look at the big Bollinger Bands, those you have in the background in here, okay? this is where you have. So this is the weekly Bollinger Bands you have in here, and I think we're going to reach out for that area. So reaching out for the weekly Bollinger Bands, consolidating wave 2, and building bullish wave 5 to come. So either in a two-wave structure, A, B, C, and terminating the point in here, or 1, 2, 3, 4, 5, and we're going to have a bullish yen. So I really don't know what the outcome will be. All I know is that for now, I think 1 to 2 quarters ahead, I remain slightly more bullish on the yen than I will be on the euro. AUDNZD is trying to figure out what the hell's at play right in here. So yesterday, bearish double signal. It's worrying, but I think that sine wave's been unable to trigger the bullish cycle in here because of the too much noise. That for sine wave really seems to be noisy, but I think sine wave should have triggered a bullish cycle in here. As you can see, that bearish cycle has been lasting for way too long, and I think this is just an algorithm mistake in here. Let me just try the version 1.20. Yeah, so if we have a look at the version 1.20, which is the next version to come, but I still need some optimization in here. As you can see in here, we've been switching to bullish cycles already. Now it's just a taking profit. So this is not something you want to sell, because it's just a taking profit pattern. But this is obviously not something that you want to be buying fully leveraged, unless we manage to break through the taking profits. So it's just, you don't really care about that. The sine wave version is not a big deal. It's just this one is still a work in progress. It's just that I think in terms of sine wave psychology, okay, this is what you need to take care of. Sine wave as a psychology is just taking care of reading cycles. I really think that some bullishness has been coming in here as we've been neutralizing the bearish cycles, and this one should have been considered bought. So we'll see how it goes. If this one rejects and breaks the supports, means the bears are stronger. If this one still managed to hold and we go for a bullish breakup, then probably we're going to have to suffer to trigger some trending kind of price action. The one we're basically looking forward for many weeks from now. But as always, a speculator doesn't manage timing. It never will be. And what we have in here is just a market that doesn't know where to go, is waiting for informations to trigger that trend, and probably the next market catalyst showing in a few days might be the trigger. Hopefully it will. As you can see, volume is picking up. So something is about to happen. Clearly, it's just we're waiting for the confirmations to come. And as long as they don't, it remains high risky kind of trading. But I just want to make sure the risks are limited enough, because if we go down, I might want to trigger some profit taking in order to buy at better prices, as always, only buying in here. But I think those volume areas are just supporting the price to trigger that breakout. It means that as long as the bulls are holding it, it's good. It's showing signs of strength as the market doesn't know where to go but fails to break the support. So at some point we're going to search for resistances, and as I think anytime we go break the resistance is going to trigger a return trade. It's just a matter of time, and timing is the only variable in here. And obviously the risk that we could be wrong still needs to be priced in the money management. So regarding the forex, we basically made a round turn in here. In terms of individual stocks, I've been shorting Apple, as you know. We talked about that with this one already. And the fact that we might be rotating the money from those kind of assets to these kind of assets. So I hope as well General Electric is going to be a gainer in the next quarter ahead from now. We're talking about weekly to, let's say, yes, weekly kind of scenarios. So don't expect this to necessarily happen tomorrow. It's going to take time. And obviously in the between, we're going to have shorter time frame trends, so probably daily trends to trigger on those weekly scenarios, and these are the ones I'd like to profit from. So I'm just basically waiting for this to happen, and it's something that you need to watch day by day, but bear in mind that the overall time frame remains weekly, so it's probably going to take multiple months to get to validate those scenarios. And generally the market in those end of cycles, now that we've returned to volatile sectors and volatile contexts, it shouldn't be a problem like it was anymore, like it was back then. I mean, the low volatile context is shitty for speculators like me, because the market is proving some kind of stupid resilience, and this is what has been causing lots of the speculative scenario to be delayed in timing, falsely triggering and things like that, because the market is resilient. The cycles are not respected. We've got artificial trends, and this is what caused the latest scenario to suffer many speculative failures. I think now that volatility is back, I think I should be able to make my work just as usual, and be able to trigger the perfect trade entries like I usually do. But I just need to have volatility, a sufficient level of volatility to do this. And the recent U.S. market lockdown was a problem to me, clearly was. And I think that now that luck has been exploding, I think I'm going to be back to usual kind of trading. And that's for the best, because I've been waiting for this for quite some time. And finally we have it. So that being said, I'm gonna stop in here, as I've been making all I had to take care of. So let me just take the questions you might have left me, and we'll see about that. So in just a few weeks back, and the news was Apple shares could easily go 20,000 and $200 worth of bargain. Then fuck it, they were obviously wrong, and now you're probably gonna have the proof of that in the next following days. That was a fantastic trap, obviously, and we'll see how the gold is trading, but as you can see today, it's already picking up, and I expect this is just the beginning. Alright, I do my best to provide you the context, but once again, you are the traders, you take the decisions. No matter what your strategy is, having a context is great, but doesn't make a trade either. It's really combining all the three steps that leads to pushing a button and nothing else. And then if you left questions out there, let me see. All right, waiting for an update after today's bearish price action for BTC. Obviously this is taken care of on that show, so nothing to fear for now as long as we remain above supports. But don't fear if the market is trying to chase some stop loss below the supports, because we're in a range and the market tries to get the money where it is, and it's generally taking stop loss of stupid traders who've been putting stop losses to close. So don't make that mistake. If you can afford to lower the stop loss, I suggest you do that. If you can't, I suggest you eventually lower the leverage to broaden the stop losses, because the context is trappy and you don't want to be among those who will take a stupid loss for a market that will probably prove you right in the end. So you just need to adjust the risk accordingly in between. And Vicky says, I'm from India. Can you just look at ENRUSD chart for a moment and give your opinion in it? All right. I never do trade this, but I'm going to accept the challenge. So we'll see about that. So ENRUSD. All right. We're going to make a monthly chart view in here. Fuck it. What's wrong? Okay. Maybe we're going to use USD ENR instead. Alright, much better. So USD ENR, make a monthly chart. We got to zoom out for years. Clearly bullish trend. So when you have bullish trend, second question you ask yourself, we're taking care of context right here. So this is how I do take care of context. Clearly this is not a bubble, really just a beautiful trend. Wave 1, big wave 3, and wave 5. So we are late stages of that trend, which means we're not taking that trend anymore as we're wave 5. So we're searching for potential retracement. So I think, in my opinion, what we should search for right now is probably wave 5 termination kind of trades, which means range bearish. Okay, you do trade range, which means you can buy, you can sell, but you're going to favor the sells, and you're going to hold the sells for a possible bearish breakdown to occur far from now. First, we're going to need to build that range, which means we still haven't even built that range. Signals suggest we're good with that. Exit signal, which means late stages of trends. So we've got everything suggesting we should trade a bearish range context. But in order to trade bearish range, first of all, you need to find the top of that range. So we're going to switch to weekly charts. And as you can see, we've got a level highlighted in here, which is 78.5. So maximum target will be 78.5. So from now, starting now, heading to 78.5 is the price area. You are looking for potential bearish signals, and the closer you get to the target, the more the more risk you limit. If you go to a weekly chart time frame, trying to find signals to trade that weekly bearish range, that monthly bearish range context, what you have in here is nothing like bearish. The market is breaking through bearish cycle, so you just let it go. We're bullish trending. late bullish trending, but still trending, so you don't want to be bearish in that context. You just wait to have additional cycles to show up. So you're basically stage 1 on 5. You know you're going to search for selling entries, but you first need for the market to build some kind of a top structure, finding some exit or taking some exit or bearish signs, signals in here to just try to trade bearish, retracing to the previous level first. So you need to be aware that in that monthly context, obviously support will be there, all right? So first thing first, we're going to build a range in near that price area, okay? So the future market top and the previous market bottom. So no matter how you do trade this, you don't want to target below those lows. All you want to do is try to build a range, and then you'll try to break down of that range. All right, so from what I can see, probably the rupee is going to be showing some strength versus the dollar, even though the overall trend remains bullish. So we should have, and it kind of confirms what I think, the fact that the next economic cycle would be in favor of other than the US. The usual standard thing that the US are leading every economic cycle. I think we're near the end of this. China is gonna be great as well as usual, but I think India will be really part of the next game, and I think the next economic cycle might be showing some huge strength from the rupee and the Indian area. I think growth sector might be, some of the growth sector might be out there in the emerging markets, especially India. So obviously, if the recession shows up as I expect it will be, the dollar will weaken, but doesn't mean this will just be it. I think this could be just because of dollar weaknesses should have the first bearish impulse. So dollar weaknesses creates a range. Recession triggers the breakdown of that range, but then probably a pullback. So early stages of the trend will obviously get to gather investment in the US more than in the India, but I think some growth will be exported out there, which means in the growth period we should see a better rupee than the dollar. So in that perspective, your rupee is probably going to retrace approximately 61% of the overall bullish trend pricings, okay? So where have I been putting this? Yes, or down the bottom in here. It sounds good, okay? So regarding this, I say this is what we probably should have in that market. First we go retracing, probably targeting to 38.2% retracement, probably no more than that, and only in a second stage according to the next economic cycle growth period we might be expecting some strength in the rupee. But in the end, I think this thing, no matter how, no matter what, remains a bullish trend, which means anyway I think the US will still remain a stronger economy than India. It's just that we're going to split the benefits somehow, and what's been nearly always profiting the US more than the other is going to change in the next economic cycle. For the reason of the stupid economy that Trump is triggering right now, he's going to have to pay for this. I've always been clear with that. This will have consequences. For now, we've been paying all the good, which means the worst is still to come. And I think we're going to pay for this in the next economic cycles, because it's going to be driven by a lot less dollar availability, a lot less credit flows in the US because of that huge spending that the tax plan is costing to the US economy, which means they're going to have far more difficulties to find money. Doesn't mean they won't find the money. They will obviously find it. There will be people ready to lend to the US economy, but they will ask for more money, which means higher rates and probably fewer money available for the economy. So it doesn't mean we're not going to create growth, but I expect a tinier, a shorter in time economic cycle for the next one, as this one has been extended a little bit, so next one is probably going to be shorter. Doesn't mean it's going to be strong, but I think strong growth, but better spread around the globe, not just concentrating into the usual areas, which is China and America. I think it's going to be more broadly based kind of growth, in which Russia could be playing an interesting part as well. So obviously I'm waiting for this. It's going to be an interesting new investment sector in the next few years, but obviously right now might be time to head toward recession and more cautious trading. I mean, for now recession is a little bit aggressive, so Obviously, as an aggressive trader, I stand on what I say, but I could be wrong. It wouldn't be a big problem either. So you don't want to bet all your capital on heading toward recession, because we could very well not. The thing is that if we do get into recession trades, it will be bad, and especially bad for the U.S. economy, but obviously we'll recover from it. We're not going to go end of the world kind of scenarios in here. Nothing suggests that. It's just we're going to have to pull back and surrender stupid gains that we've been making by accumulating too much money into the growth sector from a standpoint that this growth might have been artificial from the latest 2 years. So artificial growth, really high expectation on profit that won't be matched. And as you've been paying for profit that probably won't come, obviously the money will flow out as it's been rapidly flowing in. And in a stupid way, meaning the price structure has been stupid. We've been accumulating money into sectors, thinking that profits will be there forever and that the yielding curve, the profit curve will just steeper and go faster forever. It really is showing signs of weaknesses since the last few quarters, and I think we're nearly switching to negative return on a year-to-year basis, which will obviously force price to the downside again. So, like I said on the other video, a rotation is down the road, but more bearishness is to expect anyway afterwards. So first we're going to range, build a support, making a lower high, and then we're going to make a lower low, and this is where everybody will figure out that we're really into a bear market. But that's my job, to anticipate things and be 1 or 2 steps ahead of others. So now that being said, I'm going to leave you guys on this. Wish you a good day, and see you later. Bye-bye.